Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time higher. Good God. I can't look at this, guys. Like, my strategy is you buy it and you don't think you got its time. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. What is it? Today's Wednesday, right? Today's Wednesday. Well, I think we're still kind of in the middle of the week. I mean, we got like an ECB meeting tomorrow, right? So we'll see where that kind of leaves us, but I've got like a bunch of stuff to do because I've got like my new data up and running, although there's a couple of problems. So let's come to the charts first. Okay, so let's see here. S&P 500 did really well yesterday. Man, I can't even remember what the kind of the headline was that was making them. Oh yes, it was that the natural gas pipeline opened back up. Yes, so people in Europe were happy. Pretty crazy bull move yesterday in equities, and that is highest we've been for quite some time. All right, coming over here into the treasuries, we did see a little bit of hawkishness come into the market here. Treasuries falling down, but now look here, they're pushing back, and it just seems like they're having a really hard time keeping interest rates above 3%, which is kind of interesting because I feel like that it should be easy for them to do that, but the market just doesn't seem to think that the Fed will get any higher than that. We come over into oil. Oil's doing okay. You can see natural gas is you know, it's just kind of doing its thing. Gold and silver still just in the dumps. I got to say, like, it's just so crazy. The gold and silver do so poorly still. Dollar's really strong though. And then we got copper. Say that the let's see here, Jacob says the 5 and 10-year notes leading and the 30-year lagging. You all well, probably, yeah. So if we come back over here, well, you're not going to see it on that side, but there is a little bit of steepening here today, especially on the 30-year end of the curve. Not so much in the 2s and 10s though. So we should be a little bit worried about how strongly that will continue, but I mean, we're getting some pretty strong moves up here. I did not see anything in my morning rundown that would explain why the treasuries seem to be backing off so much. Let's see here. Putin is speaking. Forgot to say good morning first. Good morning, Jacob. Oh, and let's see. I'm going to make sure I have my news clock turned on here. Okay. All right, and it got edge clear connected correctly. Need to bring this in here. So my first problem that I see here is that it is not giving me the 6J. Do I have it on the right contract? Probably not. The correct contract is September. 6J. And the correct contract is September. Okay. There we go. Okay. So I'm getting all that data. So the problem I'm having with the data right now, I think this is actually a jigsaw problem. But look, it has the tick size in the micro treasury futures wrong, right? It thinks that it goes out to a millionth, right? 9590. There's an extra 0 on there, so that's why there's like 10 ticks in between every price, right? So I did put in a support request for that, and they're fixing it. They said we're fixing it right now. That's what they said. They're like, oh yeah, that is shouldn't be doing that. But I kind of makes me wonder, Was everybody that was trading the micros over on NinjaTrader brokerage? It could be the case. Let's see here. Go through everything. Yes. So one of the things that we're going to be able to do here today. Oh, you know what? I have to check. So I'm trying something a little bit new today. I'm going to try recording everything so that we can go and make shorts afterwards from the source videos. I'll just make sure it is. Very, very good. Wanted to make sure that it is in fact recording the extra videos that we need, and it is. So shall we come in and check out the charts? Make a chart. Low time frame charting is now production release. Okay. I don't think that I've tried that yet. Let's do 10 years futures. Oh, we want, there we go. Wonder why it cares about which account it is, but that's okay. All right. So what are our choices? Oh, we can do second ones. No, let's just do 1 minute charts. Load 2 days. Candle. There's a couple, there's a bunch of different ones. Okay, so now they can do the additional types, like the line breaks and Renkos and everything else. Oh, we do have some news coming out here. What do we got? Oh, Canadian numbers. A little bit, maybe of a reaction to it. I forget what is the CSI? It wants me to it wants me to upgrade my Jigsaw version. 3220. Wait, what version am I on? Oh, I'm way behind. I'm way behind. We'll save that. Good morning, Octavius. Well, the 2s and 10s just like totally steepened there. Oh, did they steepen? Or no, they flattened. Sorry, I got it backwards. The 2s and 10s flattened there. They get a pretty good little move up there. It looks like the 30-year actually maybe led a little bit though. It's a little bit mixed. Okay, let's shut this down for a second. I'm just gonna bring up my full picture here while we install it. I agree. Next. Ninja Trainer, yep. No, don't run on startup. Why would I want that? Every application wants to run on startup these days. You gotta start up when the computer turns on, or you might forget about it, I guess. While that's going, let's check here overnight on the Twitters. Huh. Your computer must be rebooted? No, it doesn't. No, I don't think so. Now, as we doing this, we might get a few dropped frames, so stick with me here. Let's see here. Oceanic, for me to get the full benefit of seeing all details of limit orders, pulling, stacking, refreshing, etc., and working the ladder, I need market by order, right? Market by price only displays the limit as a whole and not the particularities of them. So I think that you understand the difference between them. Okay. Well, I don't know if he's listening. This was in Discord, so I think that you understand the differences between the two pretty well. The market by order will show you at an individual price what is the details of all of the orders in there, like how many different people are in the queue, and when somebody cancels, which person was it that canceled. That information is not entirely necessary for you to be able to trade the order book, though. Not at all. There was a study done that showed that market by order data did appear to have some explanatory power. Like, they ran it through their machine learning model, and the machine learning model performed better with the market by order data. But I wouldn't say that it is essential to get any use out of the the depth of market. People have been using the DOM for decades before MBO data became available. So I'm gonna type that now. Make sure he sees it. Really, the thing that MBO really helps with is if you want to know where in the queue you are, you can explain exactly where in the queue you are with MBO data, whereas otherwise you kind of have to guess. But there can be useful information in there. Yeah, Octavius has it. He says it's useful. The question that I have to ask on it is it worth $100 a month? Is the question. Well, it might be. For most retail traders, I think probably not, though. Yep. So I can do just fine with MBB. Okay, so we got that all up and going just fine. Oh, well, that's right. It is included with Denali. But you're so how much are you paying per month for your data then? The AC is on. cool air into my nostrils. That feels good. Okay. And I open a chart now. ZN. So what is a CSI chart? Remind me, what is a CSI chart? Oh, that's the cumulative sheep index. That's right. So what this is showing you is how much volume we have compared to previous days. So yesterday was, this week rather has been, well, you can just see when we go back. Okay, here was a day where the volume was bigger than the average days before, right? But ever since then, it's kind of been below. Volatility and volume overall has been contracting, especially in this past week. We might get a little bit more activity today just because it's Wednesday. There's always more activity on Wednesday because it's like they come in. There's always more activity on Wednesdays because the people at the big institutions, they come in on Monday and they say, hey, let's do this. Then they take a day or two to plan it, and then they execute their plan on Wednesday. And so at least that's the theory behind why there tends to be more activity on Wednesday. And since it's been so quiet this week, I think that we might see some more activity here. But we just got to keep in mind there's an ECB meeting tomorrow. There's a Federal Reserve meeting next week. And the market seems to be pretty certain about how those events are going to turn out now at that point. So I don't know if there's a whole lot of a reason to trade. And it's the summer, so I think we can just kind of kick back here, right? So I should write some things down here. I just want to pull out because these are all potential topics that we could cover in a short, right? We could cut them out. Okay, so if I want to change that, data and chart type. Let's look at their new chart types, eh? Color bar. What's a color bar? Okay. Here, wait. Let's change the time frame on it so that it'll give us like actual candles. Sure. Why not do a 30-minute? Apply. Okay. Well, I'm not too sure what a color bar is gonna do. Candle, mountain baseline, volume candle, Haikinashi, Kagi. Range bars. Uh-huh. Interesting. Their range bars still give you like a full candle. That's kind of nice. I think that the interval of 1 here. Oh wait, because shouldn't the interval be? Oh, that's funny. Is that I gave it range bars. Select a chart type range bars, but then it still says minute in the interval type. But let's just come over here and change that to like 4 and see if it. I don't know if that's actually working the way that It should. You're talking about the color bar one? So if I do Boolean figure, that works, right? And come back to range bars. Do 4. Apply. Yeah, I'm what's with the wicks on the range chart? But look, I changed the interval to 4. So where do you set the range? Maybe if I come back out and hold on. Oh, it takes a while to close a chart. That's kind of weird. That might be just my machine though. I'm putting some serious load under it here because I'm like recording 3 separate streams and stuff like that. So if I come back and I go from scratch, futures. And now I selected as range bars. Interval 4. No, I don't think that's going to work. No. So maybe that feature's not finished. Well, I just want your regular oldie 1 minute. Actually, you know what I would really like is just a bar. Yeah. There we go. No, those aren't bars. What the heck? Charting still got it ways to go, I guess. Because shouldn't that give me just bars, color bar? So color bar must be the same but with colors. Yeah. What I want is a box. Actually, is what I want is a box. I mean, I guess bars like that are fine too. But at that point, I might as well just use candles, right? So there's your candle. Oh wait, and I want it to be want them to be 1 minute candles. Okay. I'm just trying to correlate up here with when these moves were. So when was 2 o'clock? Oh. I'm just like way zoomed in, that's all. There you go. Okay. Yeah, that's more like it. Okay. Now, let's see if they added any indicators. I'm going to bet probably not. Swing charts might be nice. Cumulative delta is nice. I will have it not reset on new session. Really wish I had R squared. They make it so that we can make new indicators. I'll go make a bunch of indicators because even though indicators aren't really predictive, there can be some really useful things. And R squared is one that I've found to have to be really useful in my programming. So Sierra Chart has some documentation on it, but not sure for Jigsaw. But it looks like some of the same stuff. The range bars I'm not sure are completely working correctly though. So coming back on the market here. So let's just close that. Cancel. Oh, you can close it in the window. Wait. Can we break it? What happens if? So if we come in here and we say Zian. Okay. I got the chart. I closed the chart. Oh no, then it all closed. Oh, was it because I had it was the indicator window? It was the indicator window that doesn't do it right. So I click OK here. Okay. And bring up the chart. Okay. And then I come in here and I say indicators. Let's add the cumulative delta. And then let's close the chart. Oh, it's still there. Well, what happens now if we click OK? Does it bring the chart back? That's funny. Would have been a lot more entertaining if it had just crashed the whole platform, but you know, Jigsaw does have their stuff together, so we can't. We'll have to get our jollies somewhere else. Let's bring the microphone in here. Oh, another thing that I was interested in. I'll try opening up a chart here again. I wish I didn't have to change the account every time. What? It did not like that. The dollar is getting creamed here. I heard the thing on the news squawk. I didn't. Gas deliveries through Nord Stream 1 pipeline announced for Thursday, says German media. Okay, so was already a known, but I guess the market is still reacting to it. Interesting. I wonder how much of the excessive flows into the dollar over the last week or so was just over that one issue. Oh my gosh, was double clicking there cause it to close the window or something? Okay. See, I wish to give me taps, you know, so I could have all the instruments and tap through them. I think I would like to get to the point where I'm only using Jigsaw platform completely, but it looks like we can't do that. Still a couple of things missing. Would really like some spread charts though. That's the first big thing. If there was a spread chart, I might be able to put up with some of the other missing things. Let's see here. Brannigan. So let's read this big long thing from Brannigan Barrett. He says he's seeing a lot of stuff here, and I think it might have some real insights for us. All right. Far too often, traders are relying on technical indicators to make execution decisions. Point in case, I have added a fib retracement and 200-day moving average to Netflix. A professional trader's job is to outline the objective facts. Let's do that. Netflix has dropped from $704 to $164. The last 4 months, the market has been in a narrow $20 range. Earnings gap from $330 to $245 was driven by the first drop in user growth. Volumes picked up into earnings market oversold territory currently. Now, the job of traders to assess if exit place a trade based on the probability is not based on some random lines you draw on a chart. So how would I approach today? Market set to open with a gap around 215. 210 has been sold 3 times over the last 4 months. 210 was acting as a zone of interested sellers, so I would lean on 210 to be a buyer today. Now, here is a key bit. So long as the gap doesn't get filled, price pressure remains to the upside. In other words, I don't want to see 200 trade today because it tells me buyers are weak. That makes sense. No, but that's all based on, something that he knows about Netflix itself, right? Also note, as a trader, I need to manage risk. So how do I assess risk? Simple. When gaps get filled, they tend to trade out. In other words, if Netflix trades down to 200, it will likely trade all day between 200 and 210. Note the probabilities I assign. So if I enter 210, it is highly likely I will be able to exit at 210 over the course of the day. So I have a protective stop at 195. Now let's talk target. Well, at a bare minimum, 240 is going to be tested. Do sellers enter? I don't know, but I know I don't want to stick around to find out, because if Netflix trades to 240 today, it would have been up 20%. What is the probability Netflix trades up 20%? Very small. How about 10%? Very high probabilities. Well, so the way, if we want a more sophisticated way of sorting that out, right? What he needs to do is he needs to go through how much volume does he think is going to come into the market based on this change, and what are the current liquidity conditions, and ergo you could get a relatively good estimate about how far it's going to go, because the fundamentals are usually not very good at predicting how far a big gap like this could go, right? Sometimes it goes way further than you think it can. By the way, I should come in here. Okay, so let's recap on a long-winded post. Traders don't use fibs and MA lines for anything other than observational analysis. It helps us to interpret data into a construct. Number 2, Netflix is in play today, blah, 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 blah. Lastly, not once did I mention risk reward or how many shares to buy, and for good reason. You take what the opportunity offers you. Someday it's 1-to-1, some days it's 3-to-1. As for how many shares, simple. I know my stop, I know my max risk. Final tip, keep this game stupid simple, because the truth is the market can only go up or down as a 50-50, so use simple observations to learn the probabilities in your direction. Well, there was some good stuff in there. There was a couple of places where some people ask me to elaborate further on how I manage risk. I use trading solution for pro traders that automatically manages risk. There are 9 different risk strategies. I use a strategy for high frequency day traders. I simply put in a stop and the system tells me to buy 98 shares. Oh, so you tell them what your stop is, and then it says this is the maximum amount of risk that you should take on a trade, and here's how many shares you should do. So a little utility to do it for you. That's cool. That'd definitely be useful to your trading equities. Well, now here in the treasuries, they have come all the way back. They were looking super bullish here, but I guess they decided that Nord Stream news was not actually a big deal. And or that maybe it's bad for treasuries, because that means that the economy will be just fine, right? Need to take a little break here for a second. Hold on. Feeling a little bit woozy here. Getting that whole thing where, like, when the food hits the stomach, it just makes me feel a little sick, you know? We'll be okay generally, but for a few minutes here, I'm gonna be a little bit. Yeah. Oh, President Biden, the Supreme Court made it clear after they overturned Roe the basic right to privacy, right up to marrying who you love, is at risk. Last night, 47 Republicans and all House Democrats took an important step to codify every American's right to marry into law. Well, good. Because that's the way it should be, is that you write laws. Oh, you're right. The Constitution doesn't say anything about that. Maybe we should write laws to protect those rights. And if any state decides to make it so that you can't marry somebody of a different race, then maybe it should be in the Constitution, or there should be something written in there to address those particular instances. I don't know. He's painting it as a negative, but I'm like, hey, the system works the way it's supposed to. Imagine that. Okay, Nick Timorous. What happens to the Fed's remittances if it raises rates above 3.5% this year and holds it there over the next 12 months? Interest expense exceeds interest income. Remittances go to zero. The Fed has negative income and books a deferred asset from 2023 to 2025. Then he has a picture. Ooh. I see. That's no good, per se. Can the Federal Reserve afford that? I mean, I would think probably yes, but I guess we'll find out. Guess we'll find out. Oh yeah, you know what? I forgot. I want to do something here. So I was thinking about the whole MBO thing at the beginning, and I'm kind of there's other stuff worth talking about with that kind of left out. Should I try it again? So MBO data is a newer way of doing data, right? So hold on a second. Right. So do you need MBO data? So first of all, what MBO data does is it splits out everybody in the queue, and you can see the individual orders in the queue. So like if somebody jumps out of the queue, you can see which space in the queue they were in and if they were ahead or behind you, so that you know exactly where in the queue you are. And that's its primary use case. And so a lot of robots really care about where they are in the queue, and so it's really useful for them. But there are some other weird things that you can do with MBO data. For instance, you can determine if it's a stop order, because if you come in and you see an order that was updated, but it was a market order, then that must mean that it was a stop order before and it updated into a market order. Now, we don't know how useful that is. I've never seen any studies on that. I think that it's an area of research that people should really look at to see what kind of predictive power it might have, or if the market behaves differently when it's a stop order versus a market order. But do you need it? You don't absolutely need it. I mean, it is a lot more, and for a lot of beginning retail traders, that is quite a bit of overhead cost. So you don't have to have it. But if you want to be on the cutting edge and you're interested in that sort of thing, you can do some research, then go for it. Right? Well, now that the treasuries have come back basically to where we started the regular session at, I'd say it's gotten pretty slow, yeah? Oh, this is interesting. Goldman Sachs CEO David Solomon discusses cryptocurrencies with the Wall Street Minette and says that stablecoins are really another form of bank deposits. I guess. I really don't think that people should be able to just issue a stablecoin. Like any Joe, like I should be like the way that things are now, we could come out and we could say, okay, we're gonna have Seth coin. You guys, you send me your dollars, and then for every dollar that you give me, I will give you a Seth dollar. And then you can redeem a Seth dollar for $1 at any time, right? I don't think that just anybody should be able to do that. What is stopping me from putting more Seth dollars out into the market than actual real dollars that I've gotten in? There's a reason why this stuff is regulated. And the regulators have essentially allowed the people in the cryptocurrency sphere, in the crypto sphere, the regulators have basically allowed the crypto sphere to run amok. These people can do anything that they want. And so all of these protections that we have built up over hundreds of years to protect investors are just completely useless, and people are losing their lives savings over it. It's not okay. It really bothers me, man. It really bothers me, some of the stuff I've seen here in this market crash, and people that, I mean, some of these people deserved it for sure, but some of these people just really had no clue. Somebody here trying to make the case that silver and gold might be bottoming here, but it's based on delay analysis, which I don't like. Tom delay sequential numbers, right? Which I have not found to be very effective. So the whole case that gold and silver are being manipulated by like central banks and countries and stuff, I do find it a little compelling, just because it's like, man, they just can't catch a break, can they? They just can't catch a break. I guess that doesn't really mean that they're being manipulated. I guess I just want to believe that they're being manipulated because I own a little bit of silver and I would like to see it do well, even though it's not a very significant amount. By the way, what are they doing right now? Did they spike? Yeah, they did have quite a good spike up there when the dollar came down. I think that we should see gold a little bit higher today if the dollar continues to wane, it might require the dollar below 106 to really see a significant change in gold and silver. But if the dollar comes back down, like let's say that the dollar comes back to 100 and gold and silver are still in the pits, then I'm really starting to call BS on the price of gold and silver. Like then I'm really like, what's going on here? Because this does not make any sense to me. I guess, there are some problems with the economy in China, and a lot of the demand for gold comes from China. That could be one factor, but I just can't. I don't think that it cancels out what's going on in the dollar, right? Well, I should take a breather here. We might be sitting here for a while. I'm trying to think. I feel like there was something else in the jigsaw charts that I wanted to look at, but I don't remember what it was. It's much more fun to look at my own. Oh, you know what we should do? I know. We should look at the 10-year on a chart and see what it does. This should be fun. Years, CVOT. Okay. Hey, it's not a complete disaster. It's not a complete disaster. Now, if I go to 1 minute charts, because I don't think that there's a thing every minute. Yeah, you just get those jumps and stuff. Well, I would really like to see a different chart type that is, I guess you can't necessarily do this historically, but I would like to see charts that are based more on the bid ask rather than the volume traded. Right. You can do that with the Vista chart, but in here it's a little like delta bars. Not quite. So like, oh, by the way, what's with this? Oh, because I expanded it so I could see the numbers there. So like if I come in here and I open up the Vista chart for the 10-year. Okay. So do you see how it's all screwed up, but do you see how there's this like area of like black area with little polka dots in it? Right? So that's the spread. If you watch it on an instrument more like the 5-year, which is like it has a larger spread, typically speaking, you can kind of watch it as that spread like comes in and out and jumps around and stuff. So because you could have a situation in the 5-year, for instance, where like there's only been 5 contracts the whole session. Like that's not uncommon for the 5-year right now. So really, if you want to see like what that market is doing, you kind of have to know what the spread has been doing. And you will see situations because when they want to trade, the spread will come in. Generally speaking, the spread comes in because more people want to trade. At least that's been my observation. So you can do it here for a Vista chart, but you can't do it historically. Theoretically, there is historical bid-ask data, but I'm going to bet that the historical bid-ask, if you actually started to chart out the bid-ask data, we'd probably see how what is the word? Unreliable it is. Inaccurate it is. Yeah, you get what I'm saying now. So I actually tried doing it in NinjaTrader, and what I got didn't look right. Let's just say that what I got didn't look quite right. Should be good if it's tick by tick data. No. So the problem is this. Level 2 data and volume data are separate feeds and they don't correlate together very well. So this is why tick replay, man, I find the tick replay thing so interesting, because if I come in here, like let's just say I have my 10-year chart right here, right? Come over here. Okay. So everything past 6:30 here has been live, and everything before that is tick replay. Okay. So when I refresh the chart here, that data series might change a little bit. Okay. So let's do it. I hit F5. Keep a good eye on it so you remember what it looked like before, right? So up a little bit, and then it kind of comes back, and then maybe just a tad bit up since. Okay. And now you look at it. Okay. It went up, it came back a little bit, and maybe a little tad bit since. But you'll notice there are a couple of like little gappy areas in the cumulative delta. They were a little bit less pronounced before. They've smoothed out. Okay. So when I look at like what the ending cumulative delta that I have right now is, like the numbers and the general overall shape of the chart is not all that different. It's not all that different. But if I'm running an algorithm on it, it's like, it seems like that difference is just enough to screw up my algorithms. Now, maybe that's an indication that what I'm trying to do with cumulative delta is just not, not a very good signal. There's too much noise in it. Probably this is a good chance of that. But, is what it is. But it just kind of shows you that the two feeds are separate. And when you do it historically using the historical bid-ask data, it just doesn't come up with the same answer that it does on live. It's just a little bit different. I'm still feeling a little weird. I don't know. Can you see it in my face? Do I look like not? Look kind of sick? Like I still feel just a teeny bit nauseous. While Coinbase does not have counterparty exposure to the companies listed above, Coinbase's venture program did make non-material investments in Terraform Labs. Bitfinex's comment comment. We were dumb enough to invest in a Ponzi scheme, but everything else is fine because so far none of the other Ponzi schemes we've invested in have blown up. So last night, I don't know if I signed up for this. It's not the first email of this kind that it sent me, but Coinbase sent me a notification that Bitcoin was up like 7-10%, something like that. And I'm like, I hadn't seen that in a long time. And I'm like, they're trying to drum up business. It's kind of what it felt like to me. Maybe I requested that and I'm talking out my butt, but it seemed to me that Coinbase was sending out notifications to people to try and convince them to trade cryptocurrencies again. A little pull there. So we're still in this place. It's kind of interesting to do it down here at the bottom because they have kind of bounced up a little bit a few times. But you can see it right there at 12. They don't want to put liquidity there. And when you look at it on a chart, look at what it does, right? You zoom in there. See, this area is just like, wait, where's my pen? Highlighter. Here we go. Da-da-da-da. So what I'm looking for as a location to avoid. So I come here and look at the price. It's in the middle. There's not a whole lot of contracts. So there's like 70 offer. They can't seem to make it go bid. But if they do bid, well, they did bid for a second. There was only 86. So it's like both sides don't want to put a whole lot of volume on. That can change really quickly. But you will often get these situations where neither side wants to trade it for hours sometimes in the treasuries, right? And what do you get when you look at that on the chart? You get this sort of thing. Like, look at how long it stayed there in that location. Right now, it kind of looks like they're getting a breakout, but look at the volume on it. Look at the volume on it. It's not very good. I think that it's just following the correlation at the moment. Well, that could end up making it for a good trade. We'll see. Because with the drop out of there, that is going to increase the interest. But before that, at 12, there was no interest in it at all, and it was just kind of a dead spot. Well, it seems like liquidity is a little better today. Like we're before the S&P 500 opening, and we've got thousands on there now, at least. Still pretty terrible overall, but it's a little bit better than what it's been. They come back. So let's just remember that the hole was at 12. I think that it's currency correlations that are dragging us down. But if that subsides or it's not that, pretty good chance that we get yanked back to 12, right? fact that Coinbase invested in Terraform Labs tells you all you need to know about Coinbase. Yeah, I think it does. Well, it's the whole cryptocurrency industry, man. They don't really care what it is underneath as long as they think they can make money from it. Well, so far our read on the order flow that they are stuck in the water and that they're probably going to snap back to 12 is playing out, isn't it? Still got what? 5 minutes before the S&P 500 opens up? Although right now the trend is very much to the upside. Man, if we had another positive day in equities, I don't know. Let's come to the charts. Volume. Yes, I think we need to come to like a daily chart. Yeah, let's come to a daily chart. Well, so things look pretty sad on a daily chart, don't they? Oh, you know what? I have like two types of no, this data series right here needs to go away. Okay. These are just oh, and I don't really need volume either. That's not very useful. There we go. Okay, so you can see volatility decreasing, which is actually really interesting, right? This is something I'm not sure what to make of because I've never seen it before. Typically, when you have a large decline like we did here, you're going to see that average true range go up, right? Now, we're like at the bottom, we're in the pits, and the average true range is decreasing. So that might be a good thing. Might mean that markets are calming down. I'm a little concerned though. Again, everybody seems to think that like what we're gonna see is this. We right back to new all-time highs. That's no, probably not. Probably gonna be a tough road. It's probably gonna be all over. It might be sideways for a long time. But when you look at the chart here, we are getting out of this range here. So another positive day could move us out of this box and maybe into a new box back up in here, right? That might be nice. Oh man, so I kind of had a tune in my head. It wasn't the one that I just hummed to you, but I've had this tune in my head, and I'm like, why am I thinking about that? What is that from? And then I remembered I found a song yesterday that I listened to a bunch of times, so now it's stuck in my head. But like the thing is that I don't know how you put it in. It's no, we can just say the word, but it's like sewer slut, but with a V instead of a U. And the artist that makes this stuff is weird. I don't know. I'm a little concerned that they might do themselves harm, right? But the songs are great. It's like drum and bass with a really, really uplifting, um, high, dreamy soundscape on the high end. Lots of like angel choirs singing and everything. Those are really good songs. It's kind of funny because when I'm listening to it, I'm like, oh yeah, this just sounds like drum and bass. So I forget what they call it, speed breaks or whatever. But then when you go out and you try and find like something similar, there's not actually anything even close to what this one artist did. And they made this album because I guess one of their friends died or probably killed themselves, and they had a song about it. It's like 18 minutes, but it's so good. The middle of that song is so good, and now it's stuck in my head over and over and over again. Yeah, maybe the second half of 2018 all over again. Well, the second half of 2018 was pretty good, wasn't it? My recollection. To do that, we have to go a little bit further back, right? TradingView. Okay, so here's the S&P 500. So if we go back to 2018, right, you just kind of got this, like, it just keeps going up and up and up and up and up. This bit right here. But then in October, British. Is that what you mean? Is that what you mean? No, I don't. I think that to explain what I expect, I think you have to go back way further. Let's see here. Yeah. Actually, let's do like weekly bars. Okay. Yeah. Yeah. Even this isn't really a very good example, but um, so for instance, after the .com crash, right? Here you have like the high volatility area where it bottoms out. It recovers, but like, look, it recovers back to here, and it takes forever. It just kind of goes sideways forever, and then just as they're trying to get to new all-time highs, it falls back down again. Fun times. it was listen, I didn't start watching markets until here. This is when I started watching markets. So I wasn't there for these fun times. I hear they were great. I hear that 1999 was a great party. Okay, I was like 15. It was an okay party, right? but you might get something like this where we have some good bull runs, and if you are a really good portfolio manager, so there will be some portfolio managers and algorithmic traders and stuff that will continue to do good. They'll still make the 10% per year. But those of us that are like holding in index funds and things like that, it's going to be a little rough. And I don't think that that's going to last forever, but I think that that's probably going to be the case at least through 2024. You kind of come back and look at these charts and you kind of see where we're at, right? Like, think about how you would have felt like back here, right? Okay, we .com bubble bust, down market for 3 years, it recovers. Now you're like 2 years after that, you're still down 50% from the all-time highs, right? Like, that's the sort of market that I think that we're going to be facing here. Again, everybody seems to think that here we've had this decline. They think it's going to go like this, and then or we'll be right back. I don't think it's actually going to be like that. I think it's going to take a lot longer than that. Oops. I think that I give myself a little bit more room here. I think that let's just pretend that this is the bottom. I don't know if this is really the bottom, okay? But, maybe there's a little bit of a test. I think that is going to go sideways at least until 2024. And then maybe we can come up. And then again, when we come up, it might not. I don't know if it's actually going to come all the way up like that, right? You might get the sort of like the last decade thing where it's not until way over here that it does that. Yeah, for sure. No new all-time high every week. Yeah. Well, and here's the other thing is that, okay, so let's come and look at a different chart. Okay. Consumer price inflation from the St. Louis Fed. Okay. No, not consumer price index. Or actually, maybe we do. I don't think that's the one that I want. Historical inflation rate by year, maybe? Sure. Okay. So when we look at the 70s, okay, let's kind of narrow our chart down here a little bit so that we're just looking at the 70s. So think about this. So we've been down here, right? We're below 2%. Let's do it in blue. We've been below 2% for forever. Okay. Now we're all the way up here. We're at 10% right now. Right? If we come back out. Okay. Well, they don't have the most recent data plots, but I think that we're basically to 10% now. Okay. Let me come back and fix that. Okay, cool. I was dragging that and it wouldn't let me unclick it. Anyways, okay. So we've been below 2% for a really long time. Now we come up above 10%. Okay. What happened last time this happened, right? Everybody seems to be acting like, okay, we're going up and up and up, and then the next plots are going to be down here. That's what the market is pricing right now. Okay. That's not what it did last time in the 70s. It was not at all, right? Like there was a spike and then they didn't do enough about it. And then you had more further spikes. Okay. And then after Volcker like finally got involved and was like, okay, now like we're not going to do this anymore. Like look at the years, right? 1980, 81. Okay. And then we were still at 4%. And it wasn't until 86. And I think that was a recession that it like really finally came out. And then even after that, the 1990s, was then we got to 2%, right? So this whole idea that inflation is now going to subside and that 2023 inflation year over year print is going to be less than 2% is, in my opinion, just a complete fantasy. It's never worked out that way. It takes time for that inflation that's been coming through the economy to work its way out. It's going to take several years. And one has to wonder, can the Federal Reserve really keep interest rates at 3% when, inflation is at like 5%? Like if we get inflation for the next 2 years averages out to be 5%, everybody that held the treasuries gets screwed. And especially if we don't go into a full-on recession, okay? Because I think part of it here is like, well, okay, but if stocks go further, then of course it's justified because even though you're losing money, you're not losing as much as you would have lost with stocks as if you went in bonds, right? Well, otherwise it's just man. I had a brain fart there. I totally lost my train of thought. Okay. So if it averages out to 5%, the only way that you can justify it is if the market like really, really tanks. If the market doesn't tank, if the market just kind of like continues to go sideways, then the bondholders are going to get screwed. And at that point, you kind of have to sit there like, if the Federal Reserve just keeps interest rates at 3% and just lets bondholders get screwed for like 3-4 years in a row, who wants to buy bonds at that point, right? I don't know. But I don't think that what the market is currently pricing right now is very I think that something's going to have to move. So interesting. We did, let me close this now. We did get a return back to 12. And then since then, another meta order to the downside has materialized, probably driven by the equity market moving to the upside on the open. So this is a little bit like what we saw last week, right? Now, the question is, though, how much further could this go if the S&P 500 continues to move up? Especially since yesterday. Well, actually, we could come back. Okay, so like I wouldn't really be calling it like outside of the typical range until we got to like the overnight lows, and like the next kind of like stop here is at 118.070 was where we were before, so we might be able to justify a trade going short here. I can do it right here. I'm gonna try a sim trade here. We go down, boys. Take two there. So I kind of put those orders out there on the theory that there would be a little bit of a liquidity hole and pullback there. I'm surprised that it fell back into it so quickly. You think that it's taken off? The action in the S&P 500 sure is positive, ain't it? You hope so. You're short. See if they come back. I don't know. This was kind of a little bit more of a tactical thing. The way that it came back there is I don't know if that's particularly good for what I'm trying to do. But I don't know. I don't think they were gonna snap all the way back up to 12 now. Could happen. Hey, how are you? Welcome back. You're a regular, right? I seem to recall your name. Okay, Scott. I don't know if I actually want to comment on this tweet that I just saw or not. You're short Ethereum? Ooh. Yeah, I don't know where the next turn in the cryptocurrency market is, man. So I think that what's going on over there, there's a lot of noise. There's a lot of noise everywhere. I'm gonna do it. Scott Adams says, "Is NBC News basically RT for America?" I don't think that that's fair. I have a lot of problems with NBC News and the major news outlets. I think that they have a bias in them that they're kind of in denial about. They all think that they're trying to be fair and balanced, but I really don't think that they are. But I don't think that it's fair to compare them to RT, because RT is literally like a propaganda outlet where the news stories are perfectly curated by the Russian government to get the message out that they want. And I don't think that that's how it works. I think that our news outlets get fed information by the government, and they just eat it up, and they don't sometimes they don't always do their due diligence. But it's not the same thing as where like they're almost getting their marching orders, you know. Profitable noise could be. Noise traders tend to lose money in the long run, though. I see over the last few days. I suppose this should be a buy, right? I suppose from what I've seen over the past, let's say, week, that it should be a buy in cryptocurrencies, but I could be wrong. I think that it's a situation where the amount of predictive power that what I'm about to tell you will have is questionable. But I am seeing a concerted effort in the crypto sphere to drum up activity. Like Coinbase is doing its PR all over the place, and they're trying to get people to buy it. And all of the crypto sphere influencers, all the people on TikTok and stuff, they're all talking about buying the dip here. They're all talking about buying the dip here. So you're day trading. Well, I mean, if you have a huge stop, if you have a stop that's all the way up at like 25,000 or something, and you try and make, money on it dropping $500, then that might be fine. Sure. Nope, I don't remember. I don't really care. It's Bitcoin. Do you guys not understand anymore yet? I don't want anything to do with it anymore. I only continue to post about it on my Patreon out of obligation to the subscribers that have found it useful. But I feel that any other interaction with the cryptocurrency community is basically helping them with their scams. So I just don't want anything to do with it anymore. By the way, so I'm kind of taking my read of where markets are at here now, about 15 minutes after the S&P 500 opened up. So the S&P 500 had a pretty decent open. It was not nearly as good as yesterday. They are starting to maybe test the downside here, so I don't think that we should make a final judgment on that this is going to be an update in the S&P 500 yet. If we did get an update, it would be great, but we'll see if that actually happens. Then, but I'm looking at oil in particular. Oil is just all over the place. Oil has been unusually directionless today. Usually they've been getting like big moves of a few dollars. And today is just kind of chopping around and making people unhappy, it seems. The dollar did lose some strength. They're maybe retracing a little bit of that now. And then here we are in treasuries. Again, we had a little bit of a fall and a pullback. We'll see if the order flow in the treasury continues to persist to the downside. So Salim has changed his name to the King of Boxing Your Face In. What? So are you a boxer? Oh my gosh. Did you guys see the Andrew Tate thing? Oh my gosh. So you get have you guys been seeing the Andrew Tate stuff? So I guess what's been happening is there's this kickboxer guy named Andrew Tate, made a bunch of money kickboxing, and then moved to Romania and became a reclusive billionaire or whatever, millionaire. Not a reclusive millionaire because he's like all over the place, but you get what I mean. He's got his compound there or whatever. He's living life up, right? And he has like this course, and part of what they teach in the course is like go and create these social media accounts and repost Andrew Tate content, and then put an affiliate link in your profile. And when people follow the affiliate link and sign up for the program, and that's how you're going to make money. So he's got all of these kids out there pushing all of his content, and like they're basically just reposting stuff off of his YouTube. Okay. So he's been all over the place. Okay. Well, there's another man in the influencer space that started in fighting, right? And whose name escapes me. What is his name? Oh my gosh, who is it? So finally got to cover some of the short back to chill mode. Oh man. Oh, it's this fighter. Now I need to look it up. Oh yeah. So like, Andrew Tate makes this big long video calling out Jake Paul. I have to say, he was pushing some of these cryptocurrency spams. So just on that alone, I guess I'm kind of rooting for Tate. I don't know what happened. I don't know if Jake Paul like respond. Oh, actually, let's search for it here. Let's see here. Did they accept? I don't know if I want to watch this video. It showed me a video. It's like, okay, yeah, he actually did. He responded, and they're like, okay, but we have a whole 8-minute video, and we're not going to tell you what happened yet. Okay, so they came back quite a bit more. So I don't like how long I was in that, but they did come back and fill one of my orders, so that's good. I've never heard of him. Oh yeah, that's right. That's right. The way this started was Jake Paul is like, I've never heard of him. So Andrew Tate challenges him to a fight. But then did Jake Paul respond back? Dude, if Andrew Tate and Jake Paul have a boxing match against each other, it is going to be like the biggest pay-per-view fight ever. It'll be bigger than Evander than Holyfield versus oh man, Tyson versus Holyfield. It'd be bigger than that. You think it could be bigger than that? I think it could be bigger than that, because everybody on freaking TikTok is going to want to see this, right? There's gonna and there's I think there's going to be some political stuff to it, because it seems like the right wing kind of likes Andrew Tate, right? I'm kind of rooting for crypto to go up here now because Hydro is being a little cocky. What do you think? But anyways, I digress. Is it the same Jake Paul who was pushing the fake Pokemon? Yes. It was like this guy. He was a boxer. He became famous on Twitter because of that. And now he's like on all these money podcasts talking about investments and stuff. Excuse me, I'm having my digestive system is having problems today. He becomes famous on social media, and now he's running around pushing investments and NFTs and crap. This stuff like really drives me crazy. Like the number of people in this last market hype cycle that was basically acting as financial advisors to the public that they really shouldn't be. They're really not qualified to do so, right? By the way, did you know they're like financial advisors and there's investment advisors? So I was more familiar with the term investment advisor. If an investment advisor is a fiduciary, they have to an investment advisor is a fiduciary, meaning that he has to act in your best interest. Whereas a financial advisor, who it typically will work for like your broker or something like that, they are not a fiduciary. They simply have to keep to suitability. So if they said, hey, trade futures, and it wasn't a suitable instrument for you, then they could get in trouble. But, if they say, oh, yeah, you should totally trade S&P 500 futures, and deep down they know that like the trade that person is going to execute is likely to fail, and they knew that, they were telling other people that, then financial advisor doesn't get in trouble. An investment advisor does. You can sue the investment advisor, right? I never realized that people play around with the terms to deceive you, essentially. I'm kind of thinking that there should be more rules around what you promote. I don't want people to be shut up, okay? Like I don't think that we should put laws out that make it so that, people that want to be influencers in financial matters can't do so anymore because they need some license or something they're not allowed to. Not that. I want them to have to think twice about what they say, and that if they say something really stupid, that they can be held accountable for it. That's all, so that these people stop making financial recommendations. So it's like when they recommend stocks, that's where I really think that I really don't think they should be. There's a difference between a financial planner and a financial advisor as well. What certifications do you need to get to be a financial planner? Because isn't a financial advisor just like the Series 7? You have a Series 7, you can call yourself a financial advisor. To become an investment advisor, you need to pass the Series 65 exam. Well, they're kind of hinting to me that they might start to trade this volume at 09 potentially. Yeah. There was some volume there. They're kind of looking for some direction to hold on to. We might see the liquidity hole settle here at 09.5. in which case I would either need to bail on this trade or try and sort something else out. We could, I mean, it's a sim trade, so we could try and be reckless and just, add 5 contracts at 10. And you have to clear the USCFB board exam. So it sounds like a financial planner is a pretty serious title then, huh? That sounds more difficult than an investment advisor. Wait, is there an investment planner? Is that a thing? Oh, yeah, so we get existing home sales here at the top of the hour. That's going to be important stuff, guys. Let's see here. 5.35 million and a sales change of negative 1.11 is the expected numbers. Good morning, Madi. Yeah, well, I don't want to mess with this, so I'm gonna finish. I feel like the market is kind of reacting to me, but it's like it's sim orders, so like. Okay, so it's lower than forecast, 5.12, and the sales change is negative 5.4. That's going to be a good. IMF warns that 5% of the German economy is at risk over Russian gas. Oh, wow. Well, things are okay for now, but let's remember that if shit goes down over there with gas in Germany, that's going to be a disaster. The only guy I know with that title showed me his books, and there were about as many as what the CPA study. Oh, geez. That's a stack for sure, man. Huh. Well, we are getting a good reversal here. I think that could probably bring us at least back to 12, but let's see. They're being pretty quiet and uninspiring here at 10 half or so. They're like, oh, Seth is trying to load up on sim trades. Let's move it down the other way. Yeah, all right. You do that. You do that. I see if I care. I don't know. I would think that the existing home sales. So again, the Federal Reserve is watching these home sales numbers in particular for their decision next Wednesday. But basically this says that the Federal Reserve is already having the impact that they want, and that a 1% interest rate increase is maybe not necessary because you don't want to just like completely destroy the housing market. So that kind of suggests that what the market has priced in currently is probably fine, right? So does that really so like the knee jerk just reaction to the news is definitely long, but like in the bigger picture, does it really suggest that we should move from here? Not necessarily. And so even though we did see a good impulse up, I'm already seeing the order flow kind of like just run dead. So let's mess around on the sim trade because otherwise I think I might fall asleep. But I don't think that this is necessarily the best action. Granted, this piece of news that we have is probably about the best that we're going to get, but Just doesn't look like the best trading action right now. I have a question. I have the same template as John Grady does. It showed me before the overnight session as well. Now if I start Jigsaw, it shows me only the RTH session. Okay, so you want the volume profile with the overnight session. When you select your instrument over here, do you have CBOT set as the session? Because if you want it to show the whole overnight, then I think that what you want is just what do they call it? The default. I think that what you want is session defaults. As for, is it important that you see the overnight volume versus the regular session volume? I mean, knowing where the volume was overnight, it might be useful, but generally speaking, I'm more interested in the volume profile in terms of what it can tell me like as it develops, right? Like I'm interested in the future volume, and the volume profile can give me a little bit of an idea, Like that one we came down that they traded more at 09 and 09.5 before they fell through further is a detail that I want to note, because that could mean, especially if it's been less than an hour, since that happened, that could be an area that they fall back into over and over again. So let's see what they do. They might, well, so we'll put like my stops down in here. Okay. See if they go for them. I'm kind of like, I know that I'm gambling here. I know that this is not necessarily a high expectancy trade for me. That's why I'm doing it on sim for amusement. But like, I'm a little nervous now that like I just made like a terrible trade, and that they're just going to go right back down to the lows. Well, he has the overnight. I don't know. Yeah, it's just you got to be careful about like look, here's the thing. Even the best of us, even myself, will fall into this trap, because the trap is that humans are built to do technical analysis. Everything in our evolution is basically like, let's look for patterns in behavior so that we can predict where animals will be and kill them. That's what it's all about. So your brain will always naturally go into the technical analysis and want to see more data to try and do technical analysis on it. Everybody thinks that this is like something that you learn in a textbook, and yet it's not. It's like people read that on a textbook maybe so that they can understand a chart, but then their brain just takes over and does what it wants to, and sees what it wants to in the data, because that's just the way the human brains work. So all of us will have this tendency to, incorporate technical analysis into what we're doing unknowingly, right? And I think that volume profile is one of the situations where we kind of do that, because people think technical analysis, well, that is a chart and a chart pattern on the chart. I'm not doing that. I'm looking at volume profile. But if you're looking at volume profile and you're saying there was a spot that had a lot of volume 6 hours ago, and so that's a spot that I'm going to be looking for to go towards now, now you're doing technical analysis. You're using past data to try and predict future data, when there's no indication that past data will tell you anything. Now, if you have a liquidity hole could tell you something about the short-term direction, because a liquidity hole can kind of prevent them from moving away from that location. But after about 45 minutes, the liquidity hole heals, right? So in this instance, this potential liquidity hole at 09.509 does matter, because it hasn't been 45 minutes, and I don't think that it's healed yet. Right. But once it's been past that, it doesn't necessarily matter anymore. And we all fall into that. So I don't know if that's necessarily why he's trying to use it or anything. All I'm saying is, if your DOM resets at the beginning of the CBOT session, it's not a huge deal. Because where the volume profile is really useful is kind of more as it's developing. Watching the profile as it's developing is where there's an edge. Yeah, we got a good little up move there, and it's already fallen back. It's kind of starting to look to me like this is just doing shakeout action, right? Like this is not. I think I want to come in and try and save face here before it, completely embarrasses me. Nope. He's going to go for it. He's like, nope, Seth, we want that 06.5. Aha, but I could just cancel it. I could just cancel my stop and be degenerate and add more. How reckless would that be? And let's let it just kind of chill here for a little bit. Let's cancel all of our orders. Could just hit flat at 07. There is kind of a little bit of a position there, though. Because I don't see so my modeling is kind of suggesting that in order to get to the point where like sellers are in control, going all the way back to the overnight session at least, that we would have to be back below 118. I'm really skeptical that we're about to get a trend all the way down to 118. Are you gonna prove me wrong? Yeah. I mean, that was a pretty good so let's flat. So, that's interesting. There was a few big orders in that. I wouldn't say that it was a massive change. It was about 5,000. That's enough that I can be concerned. That's enough that I could think about going short. I do find it interesting that they're still a little like they don't want to well, I don't know. We're still relatively close to 3%, right? I think 139 evens are the stop sign. I don't know. There does seem to be a bit of a downtrend here, right? So I took that trade thinking that the home sales would reverse that trend. I think that ended up being wrong. And I remember at the time I was saying, well, like this is probably the best that I'm going to get, but I don't know if it's enough. So now that that's failed, do I have enough to try and go short? Because I'm not quite sure what the story is to go short. I feel like going short. Like I feel like that the volume could justify going short, but I don't think that I really have anything predictive. And in reality, I don't think that I have anything predictive on the day at all. So my chart here for the 10-year is still a little bit screwed up. So I won't be taking any trades today anyways, but I don't think I would take it serious. Oh, David Solomon is on CNBC. Okay. We could continue to try and, they are taking out some volume right here at 06 and 06.5. I am a little bit like suspicious here. Like I think that what I'm doing, so both of the two things that I've done here today didn't really work out. It wasn't too bad, but they didn't work out. So I kind of feel on edge and suspicious, but I don't, surely there's not anything to it. I think that I'm just is just randomness, and that's just two losers. That's just random, right? So the randomness is maybe playing with my head a little bit, yeah. Because I'm sitting here thinking like, oh, but we could totally go long here. I suppose when I was another thing was like I was along, I was like, well, we'll let it go a little bit further and see what it does. I really underestimated the range there, didn't I? So part of it was me thinking, well, they can't go down that far. Yeah, they went down a little bit further than I thought. But all that means is, yes, Seth, you're correct. We don't really have anything that's super predictive of the order flow here at this moment. Man, my voice is all cracking. What's with me? What's with me today? The wrong screen up here. Goldman Sachs economists foresee a greater likelihood of recession, says CEO Solomon. Now, S&P 500 is still just kind of in the like, we don't know what we're going to do yet today. Maybe if the S&P 500 was like in risk on mode like it was yesterday, we would have declined. We would have a more clear downtrend, but Did you see a little something forming there at 06? $600 is probably too much to have traded for it to be a significant thing. I was thinking that maybe the liquidity is having trouble down here, but I'm not sure that's the case. Wonder, so I was zooming out here on the dollar. They got as low as 106.25. Really? Well, how much time do we got left? 45 minutes? Does seem to me that maybe there was more flight to safety bid here in the markets than we realized because of the Russian gas Germany thing. So that might be why we're seeing some of the downside in the treasury here today. I must say on the decline that the volume hasn't been very clear. It's not like the strong autocorrelated order flow to the downside that I would like to see. It's kind of been sideways and it's just kind of moved down. So that probably is likely to be from the market makers pulling their orders from the currency correlations, right? So we could try taking the trade off of the currency correlation with the 6J. Is what I'm thinking. Big ol' order up at 09. Is there a 1,000 lot in that '09? No, geez. Only 1% of Americans say climate change is the most important issue we have in the country, according to a new poll. Yes, one MBO of around 1,000 up there. Question is, are they able to go up there and get him? I don't know if they can. Oh, 9 is a monthly point of control? Well, given the location of the order, I think it could be significant, and I think that they could trade it. But let's see. I think it'll take a little bit of work for them to come up and get him. So let's check out on Jigsaw here. Oh, no response on that yet. Okay. So that's interesting. I think I am finding this movement in the treasuries today more interesting than it should be. Like the liquidity kind of suggests to me that they're not all that interested in trading today. Really, I really see some things that, well, okay, that was interesting. Didn't take much for them to sell them there at 06.5. But there's a lot of pulling of prices and stuff here. I'm kind of a little like, hmm. It's like they don't seem interested in it, but then it is moving. Okay. There is a decent amount of liquidity down below us too. So we do have a somewhat interesting setup here. Do you think that they'll plow through that liquidity below us, or do you think that that's going to hold? Well, given that the tape has been kind of meh, I think it might be difficult for them to get through there. But the currency correlation is still looking like to the downside. Like the 6J is still falling. Hmm. 800 by 800. My eyes are kind of doing that. Maybe I'm sleepy. Maybe I'm sleepy. Okay. Look at that. So they traded through 05 half. It was only 120. They pulled at 05. Will they pull at 04 half if they trade through that? Like they traded that. Then now that's curious that they fell through like that. No volume. Fell through. They interested now? That perked their interest? Nope, apparently not. Okay, let's take it down another. Okay. Well, I don't think any of my stop limit orders are going to end up getting the fills. Okay, that one hit. The other two did not. Well, there's a big order at 118 and there's all sorts of volume in between there. This very well could trend all the way down there. I'm not really getting anything to really give me a good idea that it will. Again, the volume has still kind of been wishy-washy. So we will get the oil inventories. That might be a big deal. They're not turning back, I tell you that much. Look at that. Well, I'm going to cancel all these, because there's no chance of that happening. I will continue to sit on the limit here, though. $5 years is really tugging. So it's a flattener again? Yes, it is. I don't know about that one. I'm going to cancel that for a bit here. I should have just like straight up leveraged up, but that's okay. Uh-oh. My kids think that they can get around my spyware on their phones. It's okay. Okay. So we're forming a little bit of a volume node at 02.5 here, so I'm going to try and work that a little bit. That might have been a reversal I just caught there. I don't know. It doesn't look like they're looking back, are they? Which government debt do you trade the most? U.S. federal government debt. I just love the 10-year. I don't know. Like when I look at this, and especially on the micros, I'm like, the 5-year, like, come on. And there should be some reasons when you want to trade the 5-year versus the 30-year and things like that, right? But like the 10-year has the most liquidity. It's the most popular. And part of me is just like, why fix what's not broken? Why fix what's not broken, right? Part of me just says, why fix? Yeah, why can't I speak? What's wrong with me? Part of me just says, why try to fix what's not broken? You know, so I end up doing the 10-year. You know? Okay, well, that turned out okay. Here comes oil. Okay, so it's a draw. Oh, there's a build and a draw. Crude inventories are draw. Distillate inventories. Gasoline inventories are a build. The 30, no. What's the 30 years more liquid? No. Look at this, okay? We got 1,000 at every level here in the 10-year, and the 30-year, they're putting up 200, 400. The 10-year is much more liquid. Interestingly enough, though, the liquidity between the 5-year and the 30-year are somewhat similar now these days. Okay, so it's kind of doing this thing where they're saying maybe Seth should try and get some fills in there. So the numbers in oil were a little bit mixed. The S&P 500 is taken off here. Last 5 minutes or so. So I guess oil inventories not being like crazy bad or something is really good for the S&P 500 maybe? They're looking really good though. That could be coming back to the daily. Yeah. Coming back to the daily, I mean, it's starting to look kind of nice. It wouldn't have to be very big. I think that as long as they close above previous day's highs, that they're probably in a pretty good spot in the equities. At least from a chart perspective, you know, recognizing that the chart perspective doesn't really matter at all. But it's nice to have a chart that looks correct, right? Don't you think? Oh, that's interesting. If you're talking about the ZB, you aren't actually off Cyrilex, but that requires you to have over-the-counter access. It's the largest basket, largest synthetics and OTC derivatives get made off of that, but strictly listed treasuries, ZN, is the most liquid. So if there's so many of that, why aren't more people interested in doing it in the 30-year? Is it perhaps because the basis in the 30-year is just too volatile for them? Or maybe it's for the same reason that I trade the 10-year. Everybody else was doing it, so that's where they all gravitated. Again, the Philo 2 wasn't too bad. I'm a little concerned about where my average price is. It's a little lower than I would like, but yeah, it's the most listed volume. We'll see that and just go there. It could be, yeah, that's probably the case. Like, I think that for here in the micro treasuries that it is a problem, right? Like, there are definitely situations where I think it would make a lot more sense to trade the 2-year or the 5-year. Like, some of these moves, the short-term interest rates are going to be much more responsive. So you're going to make a lot more if you trade the short-term rate. It's a little bit different over here in the 30-year because of, it's based on prices and stuff. But generally speaking, when we're seeing the flattening, when we see the flattening, that means that the shorter term maturities are moving more. But like the liquidity is just not there to really do spreads. Like I think that when the difference is like 1 or 2 basis points, at least short term spread trade sort of things, I think are a little questionable, right? Why are they traded in 30 seconds? That's actually a really good question. So I think that part of it, Cyrilex, is that, or at least this is the part that I know. I bet Akshay knows. I bet Akshay knows more about the history of it. But everything used to be traded in 30 seconds, actually. Believe it or not. It used to be that stocks, you could trade them in like a 32nd of a cent. And then the Congress passed a law back in the 90s, I think it was, or maybe it was the early 2000s. I can't recall, but it was well before the financial crisis. They passed a law that said that all stocks had to be priced to the nearest cent because they felt that it was too confusing to consumers to have prices that were a fraction of a cent. But that didn't apply to these other instruments that weren't really based on dollars and cents, right? And so the treasuries kept the being divided by 30 seconds, whereas, everything else went into cents and stuff. And the bund doesn't trade in 30 seconds either. And I think that it's just like, that's the way it is now. If there wasn't a 10-year treasury already out there and the CME were to bring the product out today, I bet you they would price it differently. But I've noticed that. So like the thing is I like a thick instrument. I think that for trading purposes that you want to have a thick instrument. You want something where you get a good tick to commission ratio and there's a lot of liquidity and volume that you can use to find historical patterns in. And when I say historical patterns, I mean like, find end of month rebalancing flows and things that regularly happen. Don't look at for chart patterns or anything like that. Look at like this time of month, they tend to move this way, right? That's what I think you want. But retail traders, that's not what they want. Retail traders want something that moves. So I think that if they were to redo this, they would probably make something that's more granular so that the traders could make more money off of it moving around, off of the noise, right? It looks like some support forming on the ZM short. What I see right now is still just like they've hit the liquidity hole, right? That's why I started taking some liquidity, offering some liquidity here in this spot. I don't want to take more off, though. I would, I wouldn't actually mind having two from there, but I don't think that I'm actually going to get it. I don't think that that one makes sense at the moment. So, the way this has been trading, so again, typically we want to see like push, wait 45 minutes, push, that sort of a thing. But since this seems to be driven more by currency correlations at the moment and S&P 500 correlation, um, it could just continue to drift is what I see going on right now. So man, Genesis looks to be valuing Grayscale collateral at NAV and not market price per the 3AC docs. This is concerning. We know 3A posted collateral of ... So they don't have nearly as much as they're on the hook for, huh? As they're saying. That's not good. I do kind of wonder though why you want to use 130 seconds, because it just makes like math so much harder. But whatever. Whatever. That reminds me, now it's probably a good thing to remind you guys that if you haven't looked at any of the links in the video description, you should take a look at those, or maybe you have a friend that might be able to make use of them. So the big one is that I have an indicator package. So if you use NinjaTrader, I have a couple of indicators that I frankly, I couldn't trade without. I would, I like Jigsaw. I'm kind of interested in, just to kind of see how it goes using only the Jigsaw charts. But I need my indicators because they're that important to me. So if you use an NinjaTrader, you definitely want to check those out. Also, you need a news squawk. I'm saying it like I've really, like, I don't think I've been forceful enough on this point, right? I think it's kind of, I've always kind of been like, well, if you have a news squawk, it's really helpful. Like, really, if you're going to day trade, you should have a news squawk. So if you don't have a news squawk, I know that they're really expensive, $70 a month from Financial Juice. Have a affiliate link in the video description below. They also, from time to time, have like a lifetime subscription, which I think is a great value. And then also the software that I use, Jigsaw, best DOM out there, have a $100 off coupon for that in the video description below. And you can get this mug that says Traders Gonna Trade, because it's funny. Today we were traders trading, right? Wasn't necessarily a very good reason to trade, but we were going to do it because, on sim at least, because we didn't want to get bored. So check those out. I think that if you're going to be in here every day, you should have something to show for it, right? So a mug is your consolation prize. It's your consolation prize. I think that's it, right? Oh, there's also another thing in the video description, is there is a permanent link to the live stream. So what I would recommend is that you bookmark that permanent live stream link, because YouTube doesn't always recommend the stream for whatever reason. So if you really want to get in, catch the beginning of it, because I do go through the markets and like the significant news and kind of a general idea of what direction I might be looking for. There is some good information at the beginning, so you don't want to miss that. So if you just open up the permanent live stream URL, you bookmark it, then you'll never miss anything, right? Then you can be here right at 8:30 when the stream starts. Wall Street Journal: central banks tweet stocks, houses, corporate borrowers, and the federal treasury may not be ready for a world of much higher interest rates. Let's see here. Democrats up in midterm generics. Okay. I would think that I think I was saying I had a bet going with my son, because he was saying, oh, I think that this will probably have a big impact on the election. And I was saying, well, think that you might see it change in the generic poll, but I don't think that it's going to really have a huge impact on the election itself. The Democrats are still going to get absolutely drummed, at least in the House. They might keep the Senate. They might keep the Senate. It's looking right now that the Democrats might keep the Senate. So we'll see how that works out. You know, a lot of Republicans are kind of already being like that. Well, we screwed it up because you voted for the wrong guy, and it doesn't always work out that way. But it is a little concerning. It is super, super close for the Senate. So it could be the case that the whole abortion thing. It could be the case that the whole abortion thing saves Democrats from losing the Senate, but I don't think that it's going to save them in the House, right? If it did save them in the House, that would be a really significant turn. But I don't know. This is going to be a battle that's going to brew for a long time, and especially on the state lines. I think that I would be more interested, or rather, it would be a more useful piece of information to look at individual state races, governor, senators, etc., to see how much voters are caring about the abortion issue and making their decisions off of that. I think that you might see the Republican ownership of House or state legislative bodies decrease because of this, but they have the potential to push back and take it to their advantage, because Americans do not support late-term abortion, right? And Democrats are like, we should have late-term partial birth abortions, etc., If the Republicans can change the narrative to make it about should we have late-term abortion, then that could really work in their favor. But right now, the narrative is in favor of the Democrats, where it's like, well, there are these, instances where there should be an abortion and you don't allow it. And actually, there's like the thing with this kid in, what was it, Ohio? A really good example where they were saying, oh, well, a little girl was raped and she's only 10 years old, but she can't abort. Well, actually, their state law does allow abortion, but that didn't stop Democrats from making that argument, right? And then all that other stuff happened where it's like they didn't even arrest the guy. I'm like, what the heck is going on there? And yeah, they'd have to do some paperwork and everything, and they were kind of like sandbagging on the paperwork so that she could get the abortion. The whole thing is a mess. I don't know about it beyond that, but other than it's a mess. But that just kind of is a good example of this is where the narrative has been going. The narrative is that there are some instances where I think most people would agree, probably, let's say most people, probably like 80% of people would agree that 10-year-old girl should get an abortion. But, maybe they can't. Whereas the thing that favors Republicans is if they come in and they say, well, okay, we don't think that there's any reason to abort a child after 15 weeks unless the health of the mother is in danger, for instance, right? Make it about partial birth abortion, late-term abortion. I don't think they're going to be able to pull it off, though. So we'll see how much damage it does to Republicans. I think a cute cup would have a chart going up, saying, today is the first day of my life. Pick the cup up with your other hand. Other side with the chart down says, today's not the day. Hey, that would be cool. I don't know how we would do that, though, because I don't think that I would have to look for a different vendor and see if there's one that maybe allows different images on different sides of the cup. Today's not the day. Have you ever seen that Cyanide and Happiness a cartoon with the chart? This is my favorite. This is my favorite cartoon. Like when I was at the office, and you're supposed to put a cartoon on the wall of your cubicle or whatever that is your personality so that people come into your cubicle and they see that and they're like, oh, that's funny. And then they know a little something about, I don't know. That's what people do, right? This is what I would put up. This is what I would put up. I think it's absolutely hilarious. Well, gents, it looks like our profits are on the rise. Your chart's upside down. He flips it around. Good thing that didn't change anything. I love it. I think it's hilarious, man. Like, you can totally screw it up and be a complete dunce. Still make money. Which is basically what we did today. Turned around. I think I have a little bit more to go to make money, but... Well, and it's Sims, so I guess I didn't really actually make money. Didn't lose or make money at all, but winning. Let's call it winning. I really still want. So here's the thing that I really need, man. We need a good graphic designer for this one. Is I want a shirt. Like, haven't you ever seen shirts that are like that have the astrological signs on them? You know, it's like the whole. A circle divided by 12 with all of the different constellations on it and everything, and it's all kind of mystic looking and all that sort of stuff. Like, do you ever watch when you were a kid? Oh my gosh. You ever watch Card Captors when you were a kid? I thought that was a cool show. I thought that the effects on the ground, the way that they animated that looked so cool. So a shirt like that, but instead of astrological signs, the zodiac rather, it would be chart patterns, right? And then on the back, it would say, technical analysis is like astrology for men. That's the shirt. That's the shirt that I want. I want that shirt. And then I want to go to the trading convention at large. When is that, by the way? I'm probably missing. No, I think it's in August. There is a trading convention in Las Vegas. I don't know. One part of me is like, I should go. But then another part of me is like, no, you're going to go and you're not going to have anything to do. This is all going to be nonsense BS that you don't want to talk to people about. I don't know. Maybe I'll meet people. It'll be good. But I want to go to a convention like that with that shirt, right? And then, you know, can have like a link to where you can buy it. It'd be great. Or, you know, just have speculatorseth.com at the bottom of it or something like that. I want that shirt. But I need a good artist to make a good intricate design for us. You know what I mean? Just throw paint at it and call it modern art. I really want to do that. So you know what I want to do? Seth would have to change too much. What are you saying? What are you saying? No, have you ever seen those acrylic paintings where like you pour the acrylic paint into like a cup and then you have your canvas out and you pour it all out of the canvas and it kind of makes these weird patterns and stuff. And then you can even do stuff like you can take a heat gun to it maybe and do things, or you can just kind of move the canvas around so that it covers the whole canvas. And then you just let it dry and then it's this acrylic art painting sort of a thing. I think those, man, I love watching those videos on TikTok. It hasn't shown me very many of those. I bet you that now that we've talked about it here on the stream, TikTok is going to start showing me that stuff. You just watch. But I really want to make one of those, but I want to make it with maximum purple. There's like this dye out there or paint or whatever the deal is. You can buy it online. I think it's pretty expensive. I think it's like $100 or something like that. But it is like the most vibrant purple possible. It's like it's so purple that your computer screen cannot accurately represent how purple it is, right? And I really want to see, because my wife is super into purple. Purple was always my least favorite color because I can't really see it. But I bet you I could see maximum purple, man. So I want to make a cool painting with maximum purple. Or maybe I just get a canvas and just paint it all solid maximum purple. Call that modern art, yeah? Have that framed on my wall. We should, yeah, we should do that. I should make that and make a frame on the wall for it. That's, the frame will be bigger than the actual painting itself, and then I can have a little blurb about it. Maximum purple and my name, and like it's at a sophisticated art gallery. A banana on the wall is 100,000. Then some guy. There's definitely a lot of art out there that I really do think is probably like money laundering. Oh, okay. So hold on. I'm gonna take some off here. I don't like this large offer. So I'm always kind of looking out, especially in the 10-year, when I have a large order that really doesn't need to be there. It's like, okay, if you really need to sell 2,000 contracts, you can iceberg it, right? You could do them 20, 30 lots at a time. It's probably going to be here for a while. There's no reason that you would have to show the whole market this huge sell order that you have, right? I don't think that anybody's that desperate, and it's kind of in one of those spots. I do think we could see 118, but okay, so you see it didn't actually trade it. It pulled, and they traded 968 up, okay? So that says to me that they're putting that order on there to kind of give people pressure that really they want to be filled at 01. So when I see a big order that I feel like doesn't need to be there, I want to get out. I don't want to mess with those because, he's putting it there for a reason. Probably you can see it for a reason. You don't know what that reason is. And you'd think, well, I can predict what it's going to be, and I can, can try and take the fade here, for instance. Buy it based on that large order being out there. Nah, you don't. That one never works out. Just get out. Just get out and don't reward their manipulation, right? They start pulling that BS, start putting large orders out there to try and coerce traders to trade. Just say, okay, fine. We're done for the day. Walk away. Cancel all your orders. They'll stop doing it if everybody just said every time that somebody started screwing around like that, if everybody else just said, all right, we're done. Nobody would ever do it again, right? Now you make me want to eat a banana. I mean, if it was an old banana. So, here's the thing. How did they preserve the banana? Because you can't just have a banana on, right? It must be preserved, or it must be a fake banana. Maybe he, painted a fake banana, and maybe then that's kind of impressive. If it's really that realistic, right? But if it was an old banana, we have Cavendishers, right? I forget what the banana before that was called. If it was an old banana, and it was preserved somehow, that maybe is worth some money. I'm told that the banana scent, when you do a scratch and sniff and it smells like banana, that's what the old bananas smell like. So, for what it's worth. I really should have played this a little bit differently because I started getting in at 06. I should have gotten in with more contracts at the beginning. And, I only played for one tick on a lot of these. So the number of lots that I used for this, just show you what we did overall, right? I ended up using almost 12 lots to do this. That's way too much, right? I should have been widening my spread because they were extending the range, right? So I do think I kind of made a mistake on this, and then I probably could have made twice what I did. That would have put me up on the day, but sell sim trades. I'm kind of trying to get myself back into the swing of it. I don't feel like I'm quite there. If I was trading micros today, Nah, I don't think so. I don't think I'm quite have the read on the market. The market is still kind of, surprising me a bit. It's still kind of, yeah, there's no reason to trade, but I'm going to move anyways. And I'm kind of like, oh, wait, where are you going? Where are you going, buddy? 10-year. Come back. I'm like, there's really, if we always talk about like that instruments are like women, then I'm kind of like that anxious guy, like, hey, where are you going, 10-year? Don't leave me. Please don't leave me. Does anyone have a VPS for trading? Is there any real advantage if you live in the US? I've never tried that before. Oh, you're talking about you just want like a virtual private server. You want like a machine co-located, right? I don't think that a co-located machine would help you very much for discretionary trading. It could help you for automated trading where your fills really matter. Okay. You would want to be doing some sort of market making strategy. It'd be pretty complicated. Probably beyond what most of us are doing, right? Like I tried making some robots that do that sort of a thing in NinjaTrader, and there was some issues with it. Like I couldn't sim trade it. I couldn't sim test it. So, right. If you were going to be doing that sort of thing, I think that you would be like writing it with Python. You'd be using some machine learning in there, and liquidity would matter significantly to the strategy, right? So it's a little bit beyond what we do here. Most of the programming that I do here is really geared towards helping you realize that technical analysis is bullshit, right? All of the technical analysis, because what happens is everybody wants to test something. They're like, well, I don't know how to do it, so I'm going to go and hire somebody to do it. So then they'll go and hire somebody, and it's, like a fair price for some of the things that people want is, a couple $100 to a couple $1,000, right? So you're going to pay a couple $1,000, and then they're going to give you something that, like, frankly, it's just not going to work in the long run because they're all based off of technical analysis. So really what I'm doing is I'm teaching you how to write that stuff yourself, and then you're going to try out every crazy idea that you have, and then you're going to come to the conclusion that I have, that technical analysis doesn't work very well. But you can also do real programming, things that might be really useful, like the stuff that we've done that give us stats out and so forth, right? Then you can graduate onto the kind of the next level, but to the level of like a market-making robot, machine learning sort of a thing is a little bit beyond where we're at right now. Well, guys, it's time for me to get going. So it was a fun day. We talked about a lot of fun things. I don't know what to put on the title for today. Let's just equities extend gains. Equities extend gains. That's what we're going to say for today. That's how we'll be able to remember this day, because I remember, there was this one day where it was like there was a good day, and then there was another good day after that, and that was where it completely turned, or something like that. Or maybe it was like that was a head fake, and then never after that, we never won again. All right, that's how we'll remember this day. Stay profitable, friends, or at least don't lose it all.